So if you're looking for recommendations of hard money lenders, Wildcat is a common name that I see here in Texas. So they finance up to 95% loan to cost. Okay, so that basically means you have to put down 5%. It says up to 95%. So technically, you got to be careful with this language when you're reading this, guys. So you probably, if you're just beginning and you've never done a deal with them, they're probably going to say 10% down. I'm guessing up to is probably their VIP program for people that do multiple deals with them, but this is essentially what they're advertising. And they do 70% of LTV. So what that means is they're going to lend you 95%, up to 95%, if you are buying that deal at 70% with your purchase price and your repairs including at 70% of what the ARV of that property is. So if your retail value is $100,000, that means you have to buy it at $70,000 for them to even consider loaning you 95%. And then again, the positives to this is they close super quick. They give you same-day approvals, interest-only payments, no income verifications or tax returns needed. They're lending you money based on the deal itself. That's one company, my favorite hard money company, and the one that I'm currently doing a deal with right now is Longhorn Investing. So Longhorn Investing, my recommendation, you work with Ryan. These guys are much more cost efficient. I've been building a relationship with them for a couple years now. So they're better for me because they're lending at 100% of loan to cost at 75% LTV. So what that means is they're going to lend me 100% of the money, not 5. I don't have to bring down 5%, 10%, none of that. They're lending me 100% of the money at 75%, meaning that I can give the seller a better deal using Longhorn because they're lending me 75% instead of 70. So that means if the house is worth $100,000, I can offer that seller $75,000 with my repairs included to get that deal, which would be better for the seller because they make more money, and I can get into this deal without even having to put in 5%, 10% down. They'll lend 100% of the purchase price and the repairs. The only thing that I have to pay for, obviously, is the cons of hard money, is all these ridiculous fees, right? So lender's fees, you got your origination fee, admin fee, credit report fee, flood cert, loan docs, all these fees, $5,000 in total for fees alone. Then you have insurance, right? Then you have your title fees that you have to pay for. And then you have other fees, right? Recording fees, survey, these fees can add up. So total, all in all, I'm spending $8,000 on a $200,000 house. So, and that's great, right? So that's one of the reasons why I do like Longhorn. But my favorite, again, is private money. Private money all day. If you were a private money lender and you were going to lend me, let's say $212,000, right? And they're lending me this at 11% interest, basically, right? 11% interest. If you're a hard money lender, or not a hard money lender, a private money lender, and let's say you have $212,000 maybe sitting in a 401k, right? You can lend money out of your 401k. Obviously, you would have to roll it over to a self-directed IRA. And when you roll over your 401k directly over to a self-directed IRA, you don't incur any penalties or fees. So if you were to lend me that money instead of joining a hard money institution, right, to lend that money for you, now you're dealing with the deal provider instead of a middleman, which means now you as the hard money or the private money lender make even more money on your money. So let's say 212, right? You're lending at the same rates that hard money is lending me, right? Which means if Longhorn, the hard money institution, is lending me 11%, and you're investing in that hard money institution, they're probably going to pay you 9%. Instead, if you come to me, you make that extra 2%, which in turn makes you more money every single month. So just to say, 6 months payments, let's say 3 points, right? They're actually lending me at 2 points, but we're going to say 3 points, right? So that means in 6 months, you make a return of 7.5%. In 6 months, you as the private money investor, you make 7.5% on your money on my deal. Now, if you do that twice, right? You take that same money, you do that twice, now your annualized return is 15%. Where else are you going to make that money? I mean, obviously, if you do the deal yourself, you can make more money than that. But if you're somebody that doesn't necessarily have the time to get into real estate, to learn the intricacies of investing in real estate, dealing with projects, managing contractors, finding the deal, which is a full-time job in itself, then you can leverage your money and your time by finding somebody like me who manages the contractors, the projects, and finds the deals. For you to just come invest with us, you make your 15%, 20% returns every year. Every deal is different, and you sit back and you can just collect these payments every single month, and you will see your account grow over time. Depending on what your goals are, if you're interested in becoming an investor in Pioneer Home Buyers, I'm going to link down in this description below an investor qualification form. I would love for you to fill it out and for us just to hop on a call and see what your goals are and how I can help you on your journey in investing in real estate. I'm all about accomplishing other people's goals. I mean, that's what I do. So if you're interested, fill out that form. Shoot me a DM on Instagram at zgotkeys, Z with Z-E-E, got keys on Instagram. And just hit me up and let's talk and let's chat about how we can make you more money. So I appreciate you guys. I love you guys. Please like, comment, and subscribe. And I will see you on the next video.